We're joined, in fact, right now by our host, Eddie Yu, HKMA Chief Executive. He's here with us, of course, as we kick off day two. It's day two, right, of the summit?
Well, technically day two because we have a welcome dinner last night.
Okay. Living with complexity. What does that mean?
Well, this is the second time that we're hosting the summit, and we're really glad that we've got almost a who's who in global finance coming here. We've got almost 100 CEOs of global financial institutions all landed in Hong Kong. And if you look back to last year, the theme was navigating beyond uncertainties. It was a time that the pandemic was still there. We're not certain about interest rate path, etc. But come this year, a more sober realization is that yes, but the pandemic is gone.
Okay.
But we will still have to deal with probably high for longer interest rates, a global economic slowdown, disruptions such as technology and also ESG, and these are all complexities, and also geopolitics is getting even more complicated now.
Right.
So these are all complexities that will stay with us. So what we need to really discuss is, of course, the risk arising from all these complexities, but importantly, I hope that everybody in the room can live with the complexity and find opportunities that might emerge from some of these, especially in technology and ESG areas.
Right. I was looking, in fact, at the list of panels. It's everything that you mentioned, from China to opportunities to a crisis, question mark, and risk. When I ask you now, 12 months since we were sitting almost exact spot, almost 12 months ago, how do you think the recovery's been in Hong Kong?
It's been good. Last year's summer officially marks the reopening of the Hong Kong economy. And we've got about 40, 50 global CEOs coming in. And then after that, the ripple effect was good. After they all came in, they spread the good words about Hong Kong. And then we saw senior management, their boards, and their clients all coming over to Hong Kong. So as far as the financial sector is concerned, everything is back to normal, vibrant, energetic, and people are looking for opportunities. For the broader economy, I thought Hong Kong is always a very small, open economy. And apart from domestic consumption and domestic demand, which is recovering well, we are kind of affected on the external front by the global slowdown. Right. So if you look at trade, it's been coming down a bit, but it's probably more cyclical than structural. So we'll wait for the cycle to turn, and Hong Kong will be back.
Yeah, because you would know, of all people, we take the interest rate in that we're given in the West. And what's your guidance now to people who are either sitting on a mortgage, they're looking to make a big purchase?
Right.
What's the guidance from the HKMA on where rates go?
Well, if you look at the Hong Kong, of course, the interest rate here will be very much impacted. We're tracking the U.S. interest rates. If you look at where U.S. rates are going, I would say that after rising for more than 5% the last year, it's probably near the peak of the interest rate level. But whether there's more room to go, it really depends on data, on inflation and the economy. And inflation, the last mile, could take longer than what people thought because it's service inflation, it's wages. It might come down more slowly. So if it doesn't come down well enough, there could be room for still some rise, but probably not a lot. But the main question is, how long will high interest rates stay at this level? It's not about really looking at when it will come down, but more about how long will it stay at that level and what the impact will be on both the global economy and global markets.
And one of the big domestic issues that we've already seen the impact is housing prices.
Right.
We were talking during the break that you're telling me, I was mentioning, are you worried about negative equity?
Right.
Because an increasing number of households, I think 11,000 was the last data point out of HKMA. And you're saying you're not worried at all. Is that an accurate way of describing your attitude?
We're monitoring those numbers, but we're not really worried. And I thought the risk is manageable because if you look at negative equity, it's a numerical outcome. We've got housing prices coming down by about 17% from the peak in 2021. So if somebody buys a house in 2021, using a mortgage insurance that allows you to take out 90% loan-to-value ratio mortgage, then if property market drops more than 10%, then you're technically in negative equity. So it's a numerical outcome. But what's important is not the number of negative equity cases. It's about their repayment ability and whether they're defaulting. And because if you look back to 2 years ago or before, we actually are very, very robust in asking banks in making sure that the repayment ability of borrowers is there. Not only that, their debt servicing ratio cannot exceed 50%, but we also stress test them. At that time, we put a 3% stress test to the borrower. So in case interest rate rise by 3%, the debt servicing ratio will still not exceed 60%. So the repayment ability of borrowers is good. And it's actually, you can actually see that from the default rate. The overall default rate of Hong Kong's mortgage portfolio is very low. It's only 0.07%. But for the 90% LTV loan borrowers, the default rate is even lower. It's only 0.02% because the requirement imposed on them is even more stringent.
And not that I want to make everyone write a bad headline, but what is the worst case? What's the assumption you're making? Not a projection. What's the assumption you're making on how bad things can get, and is that something that worries you, that scenario?
Well, we as I said, we asked the banks to stress test the borrowers. Before, when interest rate was 0, the stress test was 3%. What if interest rate rise by 3%? And now, because interest rate has risen for quite a bit, we lowered that requirement last year into a stress test of 2%. And that will stay for a long while. It's not our base case scenario, but it's just that just in case interest rate further rise, then at least we can make sure that the borrowers have the ability to repay.
Commercial real estate, is there anything there that we should talk about? Because that's an issue in some other places in the world.
Yeah, we've been monitoring developments in commercial real estate, and it's been coming down like in other places in the world. It's been coming down quite a bit in Hong Kong, and that's why we actually have already relaxed 2 times the macroprudential measures that we imposed years earlier on the commercial real estate. There's a clear change in cycle. When there's a change in cycle, we will relax our macroprudential measures. And we have been monitoring the situation. If there should be further correction, then we might want to look at our policy and see whether there's room for further calibration.
Well, do you think there's an oversupply issue, whether that's residential, commercial real estate?
I think it's a mix of different issues, different factors affecting both the commercial and residential real estate. Of course, supply and demand of the units is important, but the broader global and local economic conditions, financial conditions, and importantly, COVID has actually changed a bit our working habits, and there are more people working from home. There's more flexibility in work arrangements, and that might also impact on the demand for offices. And you can see that globally, not just Hong Kong, whether it's Midtown, New York, or whether it's London, it's the same.
Okay, and nothing out of the ordinary for you, or is there something structural there that you think you might need to adjust to?
No, I don't think there's anything structural, but it's really a global trend that Hong Kong is just part of it. Because Hong Kong, if you look at the office demand in Hong Kong, a lot of that is actually global institutions. And the change in policy, the way that they look at offices and commercial real estate is probably the same around the world.
Understood. One of the panels is on technology, CBDC.
Right.
Give us an update. Retail use cases, commercial use, wholesale use cases. When can we expect it to go live?
The one that we're really focusing a lot on is on the wholesale use case relating to cross-border payment. As you're aware, we have this project called mBridge that we do together with the central banks in Thailand, UAE, and China under the coordination of the Bank for International Settlement. We've already completed all the pilots. It's been very successful. It can cut down the cross-border payment into almost real time and half the cost. And we're looking at the governance, policy, regulatory issues together with the other central banks. And we're ready for launching a minimum viable product in the middle of next year, focusing mainly on trade settlement in the beginning, so that the trade settlement between these jurisdictions can be done through this new platform. Let's try it out and see where it goes. And for the retail CBDC, we're partnering with 16 different institutions to have 14 different pilot test cases to look at the use case, because we really want to find use cases that can prove that Hong Kong dollar retail is better than what you currently have. Whether it's credit card or debit card or other place. We're still working on that. There will be a new phase of pilot coming in early next year, and we'll look at
early next year.
Early next year.
Early next year. Okay. Stablecoin. That's the other thing people are waiting for. You say 2024. Do we know a little bit more when?
That's the intention. We've already completed the analysis on the feedback from our first round consultation, and we've already prepared the second consultation paper.
Okay.
It will come out very, very soon.
What's very soon?
Very soon is like in weeks.
Okay.
And after we issue that, we'll look at the feedback. We're already starting to draft the legislation. What we're aiming at is to have the legislation ready and to put into Legislative Council sometime in the first half of this year. Okay. And if we're lucky and if the Council is supportive, we hope that the legislation can be completed within next year so that our new regulatory framework can come out within 2024. That's still our time frame.
That's a clear roadmap. Final question. What's your favorite topic? We haven't talked about the Hong Kong dollar peg.
Well, that's your favorite topic.
Well, is there anything
we
to
can
talk about
it. Well, there's a very simple message. Is that there will not be any change to the Hong Kong dollar peg. No plan, no intention to change it.
All right.